Good evening. Good evening, everybody. Welcome to today's session on job work and its related issues. First of all, let me give my thanks to CTC, Indirectors Committee, Atul Bhai, and every other office bearers for giving me this opportunity. And also thanks to Archit for giving a wonderful practical issues for discussion. Before getting into the subject, I would like to give the brief introduction of job work. Job work is an age-old activity which is in practice in the manufacturing area. It has been very commonly used or availed by most of the manufacturers. However, the job work under central excise and the job work in GST, there is a vast difference. Job work under central excise means a processing or working of one raw material or semi-finished goods so as to complete part or whole of the process resulting into manufacture or finishing of an article or any such essential operation. That means the process undertaken as a job worker should result into or it should be a part of manufacturing activity, whether it is a job worker himself manufactures or subsequently principal uses that particular processed goods in the manufacturing of finished goods. But the post manufacturing activity would not be considered as a job work, because once the manufacturing is done, then the levy arises, because excise duty was levy on manufacture. Thereafter, any processing, if done, that is not going to be part of manufacturing process, hence it would not be a job work under central excise. But in case of GST, as we all are aware, the levy is on supply, not on manufacturer. Manufacturer has got limited relevance under GST. Of course, it has got relevance, but for the purpose of levy, supply is to be understood. Here, job work has been defined to mean treatment or process undertaken on the goods belonging to a registered person. That means there has to be a treatment or process on the goods, and the goods should be sent by a registered person. This is very important. So with this brief background about the difference between the job work under central excise and job work under GST, now I would request Archit to take the proceedings further, and request all the participants to mute yourself when others are speaking. Whenever you want to speak, you can raise your hands. The coordinators will unmute you so that you can speak. Let us make it an interactive session. Let us stick to the subject. Let us not diverge our discussion to other than what is supposed to be discussed or the subject. So Archit, and now you can take the session.
Yes, sir. So first of all, I would like to thank CTC for giving me this opportunity to be part of this discussion. And thanks to all the panelists for a warm welcome. Now, I'll straight away go to the case studies. I'm sure everyone must have gone through the case studies which were sent earlier. Uh, I'll just present my screen. We'll discuss each case study, and as Vasant sir said, let's make it an interactive session so that we get all the viewpoints from everyone on all the issues. Is my screen visible?
Yes, yes.
Okay, so I'll start with the first case study. I'll just read the case study and then I'll open it for discussion for everyone. Messrs. XYZ Private Limited undertakes various job work arrangements with the customers for coating and or printing tin plate or aluminium sheets. There are various customers and the activity carried out by XYZ Limited can be bifurcated as follows. First is all inputs received from customer. So basically all inputs, that is tin plate, aluminium sheet, coating materials. In case there is coating, then the coating materials, and in case he is printing, then the printing materials are supplied by the customer. Everything is supplied by the customer and the job worker is working on that. Second case study is partial inputs from customer. That is the tin plate, aluminium sheet and coating materials are provided by the customer, but ink is supplied by the job worker. that is XYZ, and the approximate value of these materials will be in the range of 5 to 15%. Third is only tin plate aluminum sheet is given by the customer. So the coating material and ink is used by the job worker himself, and the approximate value of this will be in the range of 10 to 20%. Now XYZ Private Limited wants to know whether the above stated activity amounts to job work or not in both the scenarios, but that is if the customers are a registered customer or unregistered customers. Basically, we can first discuss registered customers, then next we can discuss unregistered customers. So the whole issue is that there are three scenarios. One is all the goods are being provided by the customer. Second is some partial inputs are being used by the job worker. And third, again, partial inputs used, but of higher value by the job worker. So in these three scenarios, what will be the treatment under GST law, whether this is job work or not? So I think if someone has any views, we can unmute and allow them.
I think, Archit, this is basically the case study you given for explaining the definition of job work, correct?
Yes, sir.
Basically, you are trying to explain us the definition given job work under section 2, subsection 68, correct?
Correct, sir.
And if I go to section 2, subsection 68, I think issue that you are raising, in my opinion, to the participant is job work means any treatment or process, correct? Any treatment or process undertaken by the persons on the goods belonging to another registered person. So you are trying to ask us if the person who is supplying all these goods are unregistered hota hai to kya hota hai, registered hota hai to kya hota hai, and to the what extent the material should be there, whether the substantial material should be there or even the thoda bahut chintu bintu material bhi diya to bhi और job work hota hai कि नहीं. I think that is the issue that you are trying to address,
Absolutely.
Archit.
Absolutely, sir.
Yeah, so some participants may now give their thoughts on this, looking at definition of job work. I think पहला जो आपने दिया है अर्चित, उसमें तो पूरा मटेरियल जो है वो प्रिंसिपली दे रहा है, करेक्ट? तो फर्स्ट आई थिंक एबीसी में
फर्स्ट सिनेरियो में एंटायर मटेरियल, कोटिंग मटेरियल, प्रिंटिंग मटेरियल एंड द टिन प्लेट्स और द एल्यूमिनियम शीट्स, एवरीथिंग इज गिवन बाय कस्टमर.
And if principal is registered, then I don't think anybody has a doubt that it is job work, correct?
It is, yes. Yes, it is job work.
I agree.
तो पहला तो बहुत सिंपल क्वेश्चन है, बराबर है? हाँ?
Yes, I think that's straightforward.
या दूसरा अभी बी पे आते हैं आप, करेक्ट? जरा स्क्रीन पीछे लेना बॉस, अजीत, if you don't mind. Yeah.
In this, sir, the aluminum sheet or the tin plate is provided by customer, but the coating and the coating material as well, but the ink is used by the job worker, which may cost in the range of 5 to 15%.
So इनको आप consumable गिनते हो कि इनको आप the part of the it goes in the production. आप क्या what is your take on that?
Sir, it will go with the material itself. See, basically the work is for coating and printing itself of the tin plate.
Yeah.
So once you do the printing, it gets consumed in that process, and it will go along with the original tin plate or the aluminum sheet, and it will get returned to the customer.
So Archit, you must have understood what I am trying to draw the analogy. If it is consumables which are consumed before it doesn't enter into the final production, correct?
Right.
And here this thing enters into the final production. So some material is supplied by the job worker, correct? That is what you are saying, correct?
Correct.
So whether supplying some material which may not be significant.
Yes, sir.
then also this remains job work or not? That is your question, correct?
Right, absolutely.
So I think it is study circle meeting. Somebody has to come out, na?
Yes, Naresh bhai, so what you are stating, if it is ink is consumable, then it is still considered as a job work. So,
No, Atul bhai, the problem is different. Okay, some material is put by the job worker. That his question is, Archit's question is whether the 100% material has to come from principal in order to qualify for the job work.
Some materials be used by the job worker. Will that
change the character? Will change the character? Will it not? Will it 268 में से बाहर निकल जाएगा? That is what you are asking, na?
बराबर.
See, just I would like to give the background of central excise here. In case of central excise, it was supposed to be all the materials were required to be sent by the job worker, and only some incidental material could have been used by the job worker. Otherwise, principal only had to send all the relevant inputs. Wherever the wherever the job worker uses his own material, then there used to be question of valuation, and also that was treated as a sale made by him. And in the case of Prestige Engineering Limited, the Honorable Supreme Court made one distinction in the sense clarification, which says the extent of contribution made by the job worker, if it is substantial in nature and of considerable value, then it is not amounting to job work. So it is amounting to third party manufacturing or principal to principal manufacturing. So essentially what is required is all the relevant goods should be sent by the principal. Job worker should only employ his labor, skill, etc. to do the processing, which is going to be the part of a manufacturing activity. If at all any incidental material, in this case like paint, coating material, etc., that could have been used because it is not of substantial in nature or considerable value. So there is no issue with regard to minor utilization of his own material. So in the same way in GST, whether some use of items or goods by the job worker or substantial part of the material required, if it is contributed by the job worker, whether it's going to make any difference, because it used to be a different scenario in central excise, whether same logic is applicable in GST also. That's what this question wanted to, question was to have the discussion. Right. Am I clear, Archit?
Yes, sir, absolutely.
I think Nilesh Zaveri had raised his hand, so I have allowed him to talk. Nilesh, bhai, in case you want to talk, you can unmute yourself and discuss.
So Archit, in between, if Nilesh bhai is joining, so this is 5 or 15% is of the job works charges, or it is of the total
material out of material value.
Total material value of the total material value.
Okay.
See, if you permit me, Vasant bhai, because nobody is speaking, so I am a compulsive speaker in that case. My interpretation would be कि this printing material जो भी है, जो ink वगैरह है, that is being applied on the material supplied by the principal. If you read the definition is very clear. Process undertaken by a person on the goods belonging to principal. So ये जो tin plate or aluminum sheet है, that are the material on which I'll be processing, and in that I am applying this material. So the things processed are the tin plates and the aluminum plates, which belongs to the principal. So in my view, without even the reference of any decision or anything, your simple interpretation of the definition, because process is being done on the tin plate and enumeration sheet. So this is still the material of principle is getting processed. So it should not change the character of, job work. This is what my view is. I'm going simply by the definition, interpretation of the definition.
Right.
Hello,
Haji, kaun?
Nilesh Javeri here.
Nilesh bhai.
See, there is the circular number 38 by 12 by 2018
Yeah,
of 26th March 2018,
correct.
where it is said that the job worker can use his own goods for providing the services of job work.
Yeah,
Right.
but have they written any what extent or anything in the circular?
No,
that is not.
no. I think the
Same
doubt
thing.
was people
Yeah.
have confusion that if I have only have to work on the goods which are provided by the manufacturer, and I only have to charge job work charges. I
Correct.
think this circular tries to say like this. I will just try to read. The
Yeah,
job
please.
worker is expected to work on the goods sent by the principal.
Yeah, that is in our case aluminum
Okay.
sheet, another thing. Yeah.
However, it is clarified that job worker, in addition to the goods received from the principal,
Yeah.
can use his own goods for providing the services of job work.
Correct.
So I think once we read this circular, which is given by the board, I think it is fairly clear that it is a job work. Whether even if the party is using some incidental material while carrying out the job work.
Agree. Nilesh bhai, I agree with you.
Yes.
Yeah. I think Rajiv sir wants to say something.
मैं मीटिंग में करता हूँ.
Sir, you are on mute, I think. Rajiv sir, we cannot hear you.
Meanwhile, Archit, you can. Rajiv comes. Meanwhile, आपका भी चालू दो दे
Hello.
दीजिए.
Hello.
Yeah, Rajiv bhai is come. Yeah.
Yes, sir. Yes, sir.
Yeah.
Yes, Rajiv bhai. Yes.
Am I audible?
Yes.
Yes, sir.
See, in your question, Archit, you put up 5%, 15%, whatever. In my view, this percentage has no relevance. The job work definition is concerned, it's very clear to that extent that the principal is supposed to give me the goods, and as a job worker, if I do any treatment or process, if I undertake any process or treatment on the goods which are belongs to principal, during that process there may be pure labor, there may be some component of goods, there can be substantial component of good also. I'll tell you, if you give me say a chrome or maybe iron rod, etc., and ask me to plate it through gold plating, so gold
Right.
plating mein gold is a very costly item percentage wise also, but still it will
Correct,
be it will go as a job worker because value has no relevance whatsoever.
I
The 5%, 15%, it can be 500% also, but it should be on the goods which are belongs to the principal. I have to do some process, and if that is been done, your Vasant sir is a rich person. He gives me a chair of say a metal and asks me to convert into gold plated chair. So then also I will be job worker. My gold portion may be substantial because he can afford and he can pay, but still it will be a job worker in my view.
Yes, sir.
So, Archit, I think you and Vasant should close this issue now by your comments.
So, sir, my comments would be ki, as rightly discussed by all the participants, that job work definition does not restrict anything. It simply says any treatment or process undertaken on goods belonging to another registered person. So there is no restriction that you cannot use your own goods or something. And this CBIC circular, is my screen visible, sir?
Yes, 100%.
Yeah. So this is the circular which I think Nilesh bhai was referring.
Yeah.
And the last para which I've highlighted. So CBIC circular also clarifies that the job work, in addition to the goods received from the principal, can use his own goods for providing the services of job work. Again, they have not specified any to what extent or anything. And the landmark judgment of Prestige Engineering, of course, is there, which Vasant sir also mentioned. I'll just, this is the relevant portion of that judgment, sir. We must hasten to add that addition or application of minor items by the job worker would not detract from the nature and character of his work.
Now,
For example, a tailor entrusted with a cloth piece and asked to stitch a shirt, a pant, or a suit piece may add his own thread, buttons, and lining cloth. Similarly, a factory may be supplied the shoe, upper, soles, etc. by the customer, and the factory applies its own thread or bonding material and manufactures shoes therefrom and supplies them back to the customer, charging only for his work. The nature of its work does not cease to be job work. So there is no such restriction. Of course, Supreme Court in this case had mentioned that only minor additions can be done. But that this judgment was for the earlier law when the job work definition and the purpose was altogether different. Now the definition is wide enough and it does not restrict any such thing. Even the triple AR ruling. Hello.
Right.
Yeah. So even the appellate authority, advanced authority ruling in the case of JSW Energy, in that case, the principal was giving coal to the job worker, and the job worker was using air and water and other materials. So it was held that the job worker is using his own materials, but the principal has supplied coal, which is the main component and having 95% value, and therefore the services by the supplier will be job work only. So basically, in my opinion, in B case as well as C case is also because the main tin plate and aluminium sheet are provided by the customers, and coating material and ink is supplied by the job worker, which does not exceed 20%. So again, as Rajiv Bhai said, ki the extent of this does not matter. What you have to see is that I am working on the goods provided by the customer. So even this 20% may go up to say 50%, 70%, whatever. But the crux of the transaction does not change.
Yeah.
Yes, Vasant.
Can I add few words?
Yes, sir.
See, in GST, the term job work has been made very simple. The processing of the or treatment by the job worker on the goods sent by registered person. Whereas under central excess, it was not so also. And it was supposed to be a part of manufacturing activity. And the restriction of the item used by the job worker was mainly on account of the fact that the goods manufactured by the job worker was exempt from excise duty under notification number 214/86. That's why there was a restriction. Though the process was amounting to manufacture, the job worker was not required to clear it on payment of excise duty. He was supposed to send it back under the prescribed challan to the original manufacturer, that is principal manufacturer. Because of that, the extent of use of his own goods by the job worker was material. Whereas in case of GST, if job worker uses his own material, unless it is considered to be a composite supply of a job work service, it may be or it will be the value of such material will be added to the composite supply of job work service. Hence, GST would be paid on that. There is no loss to the government. Hence, there is no such restriction of extent of use of material by the job worker. But it has to be a process or a treatment on the goods given by the principal. The definition of treatment or process has not been given in the GST Act. We have to understand by a general meaning, and it could be any activity. I would like to refer one case law of Andhra Pradesh High Court in case of Brook Bond India Limited. It is an old case law of 1984, 15 ELT 32, where it says what is necessary in order to characterize an operation as processing is that the commodity must, as a result of the operation, experience some basic and material change. That means if you undertake any operation on any goods, there has to be some change. It has to experience some basic and material change. So that will be considered as a process. And treatment also, it is more or less same. It has not been defined. We have to take the general meaning of treatment. So any activity, if you do on the goods belonging to principal, it will be amounting to job work. When the only restriction is the principal should be registered person. If he is unregistered, that part, Archit, you can discuss now.
Yeah. So I think more or less, sir, the view is consistent that when the customers are registered, this activity will amount to job work in all the three cases ABC. Now the next question is that if the customers are unregistered, then what will happen? What will be the GST impact? How the transaction will be seen?
Mr.
So,
Paras Chawla wants to add something. Mr. Paras, you want to add?
Parasji, you are on mute.
Paraji, unmute yourself, please.
Okay, he does not want to speak actually. Yeah, Archit.
Yeah. So should we wait for any other participant or should we?
No, Archit,
You can express your view.
You have covered nine case studies, huh? बहुत एम्बिशियस प्रोजेक्ट लिया है तूने रात में, तो फटाफट करना पड़ेगा फिर.
Yes, sir. Yes, sir. Sir, now when we see it from the angle of unregistered person, so the services, basically one can say it's a supply of goods as well as service, because some goods are being used, but then as we discussed earlier, the goods are getting consumed in the process of providing the service. So it is, if at all, if it is a composite supply, then the principal supply would be service. And so the definition of job work says only when the job work means any treatment or process undertaken by a person on goods belonging to another registered person. So if the goods are not received from a registered person, then it cannot be job work, but it will still remain a service. And entry number 26 has given that bifurcation, where services of job work will attract 12%. So basically, when you are providing the services on physical inputs of others, then if it is a registered person, then 12%. Otherwise, manufacturing services on physical inputs or goods owned by others, it will be 18%. So in case of unregistered person, it will go under the 18% category. And so the circular, when this entry was bifurcated, at that point of time, CBIC had clarified. So the circular of 22nd November 2019, I'll just read the highlighted portion. On the
Archit, 1 second. Your screen sharing is stopped actually.
Oh, I'm sorry.
Yeah, it is fine now.
Yeah. So this was the notification, basically entry number 26, where there are two rates. And then this is the circular of 22nd November. So the highlighted portion says, on the other hand, the entry at item number 4. So this is entry number, item number 4, 18% entry.
You can make it full screen, Archit. Yeah. Okay.
Yeah. On the other hand, the entry at item number 4 specifically excludes the services covered by entry at item ID and therefore covers only such service which are carried out on physical inputs goods which are owned by persons other than those registered under the CGST Act. So basically, if the customers are not registered, in my view, it will still remain services but taxable at 18%. And so there will be no job work procedure to be followed. That is, no 143, no, there will be no challan coming from the principal to the job worker. And the e-way bill also will not be prepared by the principal at all. In fact, when the goods are coming, if you are receiving goods from an unregistered person, if there is movement of goods, then the registered person, that will be the job worker in this case, will have to prepare the e-way bill. So, and raise 18% invoice on the job charges. Yes, Vasant sir, if you want to add something or highlight.
Yes, I fully agree with what you are saying. If both are unregistered, job worker as well as the principal, then either themselves or the transporter is required to create the e-way bill, and on the strength of the challan, movement can happen. But there would be some accountability on the both the job worker as well as the principal to have the proper accounting of the goods sent and received. Otherwise, of course, they are unregistered. If the value exceeds, then only question of payment of tax arises. If the value of such goods are well within the specified turnover for registration, there should not be any tax implication on that. That's
yes.
it.
So we'll move on to the next query, sir. Then, yeah. Case study 2. Messrs ABC Private Limited is a manufacturer of goods. The company has appointed PQR Private Limited for doing job work. Both the parties are related as one is holding company of the other. ABC sends coal for job work activity to PQR. PQR uses these materials along with other materials like water, air to generate electricity, which is supplied back to ABC. The company approached AAR for an advance ruling. As per the company, the activity carried out by PQR is job work activity. However, AAR held that since electricity manufactured out of coal, air and water is a completely new product, hence it amounts to manufacturing and therefore there is no job work activity. AAR further held that since ABC and PQR are related parties, the supply of goods by ABC to PQR will be subject to tax even if it is without consideration. So the second part we'll discuss later. First, we'll discuss this, whether the stand taken by AAR is correct. So basically, the contention of AAR is that that electricity is being manufactured by the job worker PQR, which is a completely new product, and therefore this amounts to manufacturing and it is not a job work. So the question is whether this stand taken by AAR sustainable.
Archit, this particular position taken by AR is totally perverse. Job work can result into some new product also, as Vasant Bhai has initially stated that job work, by doing the job work, you can take a raw material and convert into the finished product through the job worker. So,
right, sir.
So emergence of new product does not render the job work sort of non-job work. So pahila part to, I think the AR has gone on some wrong footing, because there is nowhere in the definition of job work or nowhere in the earlier all jurisprudence or entire the history of the job work there has been this kind of an sort of an issue raised karke. Correct, Vasant bhai? Yeah. Job work in 99% cases job work turns into the manufactured goods of different goods. So I think पहले point के ऊपर तो I think my view is totally it's a perverse ruling as far as that particular observation is concerned.
Hello.
हाँ राजीव भाई,
अभी आप म्यूट किया, अनम्यूट कीजिए.
हाँ. Can you hear me now?
Yes.
Yeah.
See, my reading, I have a different view on this. My reading says that job work, again definition, any treatment or process undertaken on goods belonging to another registered person. Let us go with a little background of the service tax regime also. And Vasant sir has given the background of excise regime. There were issues related to manufacturing versus job work in excise. But as regarding the service tax, the job work activity is concerned specifically were treated as a service, and the manufacture term is concerned if any activity tantamount to manufacturing was kept outside the purview of service tax, and any activity which makes the value addition, that is process on the product. My view is concerned job work has to be understood in a way that there has to be some value addition in the goods which are being provided by the principal, and without changing the commercial nomenclature of the product to great extent. I would, in a way that in many cases there may be a possibility to great extent that commercial nomenclature of the goods may not remain, may remain the same even after the job work. So I will personally feel that here the coal which was being given, it is a raw material for generating electricity actually. So of course there are other material also required apart from coal, but coal could be the one of the major raw material. The output is concerned is coming out is completely a different product, although it is shared between same party. But in my view, it is a manufacturing to that extent. The new product is coming out completely to that extent, and the one has to give the effect of GST in that view. I support this advanced ruling to that extent.
Okay.
Rajiv bhai, you are taking the service tax analogy.
Yes.
Me and Vasant are taking excise analogy.
Excise analogy, I have
Yeah.
no different view. Excise
Yeah,
analogy, there were issues between manufacturing and job work. That is fine. Service tax analogy, the manufacturing was kept outside the purview. There were specifically any activity tantamounts to manufacturing was outside the service tax.
Excluded from the service tax.
And those days in service tax, they used to say there has to some value addition. Like they have given example, if you do powder coating on a aluminum sliding, that aluminum sliding remains the same, only it is a value addition, or may polishing the chair or furniture. Those are the example. It's only a little background, but here, even in the GST regime, what is being stated as the treatment and the process, okay, on the goods. Now, actually speaking, coal is the goods. I am not doing treatment on the goods, but I am producing something with the help of that goods. There is a difference. The coal, I am never giving any process or treatment on the goods provided by the manufacturer, or sorry, by the principal, but I am using, consuming, or rather I can say it's a raw material for generating altogether new product, which I am giving back to the same person. So there is, in my view, it is not gelling with the intention of the law, the way term job work has been defined here. If it is there for treatment on the goods, then your goods are concerned, it remains, it may not lose its identity fully to that extent. Here, the coal will be extinguished fully, and it may turn out to the ashes also. It may be consumed also fully, and that's how the electricity has been generated. That's why I feel it is a more of a manufacturing to that extent, and altogether new product coming up, and it is a sale of electricity thereafter between these two rather than a job work charge.
See, as far as
sorry, Vasant bhai, एक ही minute only rejoinder to what Rajiv bhai said. Can we go to the intendment of the law, where the law is very clear? See, otherwise, if they wanted to do it, so they would have kept in the definition of the, because they have already defined the manufacture terms. They have defined in the law 2/72. So
Yes.
if their intention was to exclude manufacture from the job work definition, then they should have kept it in the job work definition, excluding manufacturing or this thing. So what we have been always understanding in the excise also, okay, job work can ultimately result into some different goods also. And GST is nothing but, it's basically all acts are subsumed in this. So how we can give only the intention which was there in the service tax, And my view is very clear, Rajiv bhai. Okay, since they, if law were to exclude manufacture from the job work, they would have given this under the definition itself. The treatment means treating something. If I am treating water and I'm making the steam, both are different. The treatment does not mean treatment is we have to take in a, perhaps, as the Vasant has initially said, that process and treatment is not defined in the GST law. We have to go by the common parlance meaning. So process can be manufacturing process itself. Why not we say that process cannot be manufacturing process itself? It can be process means manufacturing process also. It can be some other process also. So I am of the view, Rajiv bhai, that the definition of job work would include it. And now I am, Vasant, your and Archit's turn now. And
No, I just want to make 1 minute, if you permit me. Hello.
Yes, sir. Please go ahead.
The term manufacture definition, both are independently been defined. And it is a processing of raw material or inputs in any manner that result into a new product. Now, if you compare this with job work never says that whether new product emerges or not emerges. But manufacturing, if you want to classify any transaction, there has to be emergence of new product only. Otherwise, it will never covered in the manufacture, looking at the definition under GST. So in this case, the raw material is coming to me, and thereby that is emerging into new product for sure. So there is a manufacturing happening, no doubt about it. It is fitting within the definition. That is what I am trying to say. Now, question is concerned that you may take a labor charges for the same and that everything is fine, because but it is certainly not a job work to that extent. That is what is my decision, because the terms are being separately defined to that extent.
Yeah, this term job work, both under central excise and as well as GST, is not restricting or prohibiting the manufacture. As far as excise regime is concerned, the process was one of the activities of manufacture. Then only it was amounting to job worker. It should result into manufacturing of finished goods either by the job worker or by the principal. As far as the GST is concerned, as per the definition of job work, it doesn't say anything about manufacture, because the manufacture has been very simply defined under GST. I agree. The process should result into a distinct product or distinct article with distinct name, characteristics, and use. Whereas the job work process, job work definition in GST simply says any processing or treatment done on the goods belonging to a principal. So under service tax, this exemption, it was only for the purpose of exemption. This manufacturing was used. If it was amounting to manufacture and used in cleared on payment of duty, then it was exempt from service tax. If it was not amounting to manufacture, then service tax liability was to be paid. But it never prohibited the emerging of a new product. And coming to the practicality, even in case of pharmaceutical industry, it was a very common practice to manufacture goods on job work basis. It is also called loan licensing. In the sense, the principal manufacturer would send his raw material, be it chemicals or any bulk drugs or APIs.
Bulk drugs, yeah.
And the job worker used to manufacture the finished goods itself. And either he would clear the goods on payment of excise duty from his premises to the places directed by the principal manufacturer, or he would have returned to the principal manufacturer on payment of excise duty. So whether excise duty is to be paid there or not is the as per the arrangement between the job worker and the principal, because per se exemption is provided under notification number 214/86. So what I wanted to tell is whether the end process or the end of the process, the goods are going to lose its existence. The goods sent by the principal would lose its existence or not, it is immaterial. Any process has to be done on the goods sent by the principal. In most cases, for example, in case of plastic bottle manufacturer, if it is on job work basis, principal would send the plastic granules, pallets, and in the process, pallets will become bottles. While sending, he would have sent by measuring the input by way of kilos or quintals or kgs or whatever it is. But when it comes back after processing, it will come back in terms of numbers. This is, of course, another challenge. But the originally sent goods will lose its existence by using that as a raw material. The job worker will manufacture the finished goods and send it back to the original manufacturer. Whether it amounts to manufacture or not, because as I have said earlier, manufacture is not an event for event attracting levy under GST. Hence, for this job work, it is not at all relevant whether it is amounting to manufacture or not. So what is to be seen is whether it is well within the definition of job work given in the GST provision, that is section 2 subsection 68. As long as it is meeting the provisions mentioned therein, we need not add something which is not there in the definition, saying that it is amounting to manufacture, hence not a job work. That's what my view is.
Sir, we have a few hands from the participants. So, Shreya, you can unmute yourself and...
Only 1 minute, Vasant sir. Can you just clarify? In manufacture, they have never used on the goods belongs to principal, whereas job worker mein goods has to be belongs to principal. If that being the case, how manufacture will be at all relevant for entire GST?
Yeah, I will explain that. Term manufacture is because if you look at the definition of business, the manufacture also amounts to business. Manufacturing is also part of business, and also any ancillary or related activity of manufacture is also part of business. The once goods are used in manufacturing, then it can be said as goods are used in business. It is more relevant for the purpose of input tax credit. For example, goods lost in the manufacturing process. Then if you ask the question of ITC, whether it is ITC is available or not, because it is not used in the goods supplied subsequently. It is lost in the manufacturing itself. In that case, it may be said, as per the definition of input, it is the goods which is used in the course or furtherance of the business. So manufacturing is nothing but a business. It is used in the business, hence ITC should be eligible. For this purpose, manufacturing is relevant in GST. Otherwise, since it is not at all an event for attracting the GST, there are no other relevance in entire GST.
Okay, thank you.
Vasant bhai, we have few hands from the participant. So, should we tell them?
Yeah, please.
Shreya, you can unmute. Shreya Shardul Muzumdar. Yeah. Also, Arup Dasgupta is also there.
Yeah, so good evening, everyone. So I just wanted to bring in the point which just now Vasantji was sharing. Rajiv ji had asked, am I audible?
Yeah.
Yeah, so Rajiv ji had asked a pertinent question. That is the question that was in my mind also. Here, in the definition of job work, one word seems to be coming out, which is belonging. That shows a term of possession. So, in the case of job work, ideally, the possession is held by the supplier of the goods. He is actually holding back the possession because afterwards, either he's going to bring it back to his place or he's going to dispatch it to some other place of his recipients. But the possession lies with him. So, but in this particular case, what is happening is the possession over coal will not lie with the supplier. he has extinguished the right, because once the coal is being processed for the purpose of generating electricity, he is not expecting to have that possession over coal. So in my sense, I would go with what Rajiv ji was sharing also, that distinctly, because the coal is utilized in the manufacturing of the electricity, it will be treated as a manufacture and not as a job work. Because here there is a transfer of the possession right and interest. But in job work, only my right title may be transferred, not the position. I expect it to get it back.
Arup ji, my view is, I am just adding to your this thing. Your goods are converted into the other product, and that ownership of that other product is also that of principal. It is not of the job worker, sir. So only the form of the goods changes, but
Right.
it does not prevent, it does not make the job work a non-job work. This is my view is
No, but one thing to counter this, one argument to counter this argument is that when I am making a leather bag from raw leather, when I'm making medicine from the units, or I'm making LDP bags from LDP granules, the LDP bag has inherent character of the LDP granules. The leather bag has the inherent character of the raw leather hide that I'm having.
Correct.
But when I manufacture electricity, the entire characteristic of coal extinguishes.
So is it fatal to the definition of job work? That is what the whole issue is. And hello,
in my opinion, yes.
Yeah, Arupji, let even Archit speaks out, because that triple AR, the double AR ka superior authority has itself turned down the argument of the double AR, sir. Triple ARs come on some different footing. I think Archit or Vasant bhai.
Yeah, JSW Energy.
Yeah.
Yeah.
So,
yeah. Archit, can you explain that?
Yeah, sir, I'll come to triple AR. Before that, sir, just a couple of points.
Yeah.
Sir, if we see the definition, my screen is visible, right?
Yeah.
Yes.
So job work means any treatment or process undertaken by a person on goods belonging to another. And manufacture means processing of raw materials or inputs in any manner that results in emergence of a new product. So in this, my view would be that manufacture is more of a subset of job work, because job work may amount to manufacture or may not.
Yes.
Yeah,
I agree with
it
you.
will still remain job work. That because the wordings are that any treatment or process undertaken on goods belonging to another. So that treatment or processing may result into a manufacturing or may not result. It will still remain a job work. If we see what is the meaning of this treatment or processing. So there is one observation by Supreme Court in this case of Chogley and Company. It says wherever a commodity undergoes a change as a result of some operation performed on it,
Correct.
or in regard to it, such operation would amount to processing of the commodity. The nature and extent of change is not material. So basically, for processing, it is immaterial how much that processing results into a change. If it results into a substantial change, it may amount to manufacture, but that does not debar it from becoming a job work activity. And so this case, actually, this entire case study is on the case of JSW Energy. AAR had actually taken exactly this view that it amounts to manufacture and therefore it is not a job work. Then it went to triple AR. Triple AR said that amounting to job work does not debar it from becoming a job work activity. But then it said ki because substantial material is used by the job worker, therefore it is not a job work. So it went on a different ruling altogether. And then the company appealed went into appeal before High Court. Then we'll discuss that what happened in High Court, and then High Court remanded it back to triple AR. And after that, triple AR has allowed the applicant's petition that it is a job work, and they have manufactured basically electricity out of coal given by the principal. So in JSW Energy, triple AR has finally treated it as a job work. Sir, couple of more points on this. Basically, if we see, it's a very classic case that in textile always it is very common. You see, job work activity is done in textile industry. Over there, what happens? Fabric is given, and then or yarn is given. You convert into fabric. Fabric is given. You may convert it into a shirt or something. In fact, Yeah, in fact, in the case of prestige engineering, which we were discussing in the first case, that example over here has been taken by Supreme Court. For example, a tailor entrusted with a cloth piece and asked to stitch a shirt, a pant, or a suit piece may add his own thread, buttons, and lining cloth. So over here also, altogether new product is coming. You are giving a piece of cloth, and the job worker is converting it into a shirt or a pant. So it may amount to manufacture, but it will still remain a job work. Uh, Sir, one more example would be, I'll just take you through. Yeah, sir, this is the entry, the entry from rate notification pertaining to job work. There are various entries in that. One of the entries says services of job work in relation to manufacture of leather goods or footwear falling under this. So the rate notification itself is saying that job work in relation to manufacture. So uh, again, I would say that job manufacture appears to be a subset of job work, and they are not two mutually exclusive activities. It can amount to job manufacture, but it will still remain job work if it is done on goods provided by the other person.
Archit, that tailoring example, which was a case law?
Prestige engineering.
Supreme
Prestige engineering, Supreme Court.
But the only thing that means the job work and manufacture in excise era, pre-GST era, the distinction was very, very important because
Right,
manufacture was liable for excise duty, not
Correct.
the job work.
Correct.
To
Sir.
that
Correct.
extent.
Correct. Yeah, Vasant sir, you want to add something?
Yeah, see, in case of this particular activity, even if it amounts to manufacture per se is not a taxable event. So what is taxable event is supply. The job worker, when under the provision section 143 sends the goods to another person for further processing, even though raw material, the goods sent by him loses its existence and it is totally converted into a new product, since by using that particular goods which are sent by the principal, it is amounting to job work only. And even if it is amounting to manufacture, the activity still remains to be the job work, because the GST is mainly based on the contract, how it is entered into, what it is the intention of both the supplier and the recipient. Since it is a contract based levy, the contract between the principal and the job worker is to do the processing, which incidentally may result into manufacture, or the earlier goods sent by the principal may not be able to correlate with the final product which is emerging after the processing. That is irrelevant for the purpose of job work, so long as it is meeting the definition of job work. Even if new product emerges which is known as a separate commodity in the market, still it amounts to job work only. So I agree with you expressed by Archit and others. Yes, Archit.
Yeah. Sir, I think there are some participants.
Hello. Am I audible?
Yes, sir.
Yeah.
In this case, if there is no relevance of manufacture as such, then there may be problem with respect to composition scheme, whether the rate applicable to the manufacturers is different under section 10.
No, composition deal that is only for traders, no, not for manufacturer.
No, it is even for manufacturer also.
Okay. 0.5 and 1%.
लेकिन सर्विस प्रोवाइडर के लिए सर्विस प्रोवाइडर के लिए देयर इज अ कंपोजिशन स्कीम ओनली फॉर द 6%. ना, जॉब वर्कर विल ऑलवेज बी ट्रीटेड एज सर्विस प्रोवाइडर, सर.
सर्विस प्रोवाइडर, राइट.
सर, under the law, job worker is always a service provider. He is neither manufacturer nor trader. So composition scheme में, if he is a job worker, he is a service provider, and if he is that, I think service provider के लिए there is some limit of some
50 lakhs.
नहीं 50 लाख का नहीं है ना जॉब वर्क के लिए. सॉरी, 50 लाख का है क्या सर्विस प्रोवाइडर के लिए?
Yes.
Without ITC credit, correct?
Yes.
So I think the question is The gentleman is asking the question कि इसमें composite scheme में क्या impact होएगा? I don't think a manufacturer because job worker is never a manufacturer, correct? Under the law.
Right, right, sir.
I think we should go ahead. Vasant, you have long agenda to finish.
Yes. You can take up next question.
Yeah. So, sir, in this query itself, as I said, that the company went, the applicant went to AAAR. AAAR. So I'll just read the last para over here. In appeal, AAAR also held that the activity does not amount to job work. However, on a completely different ground, that is that PQR has used its own materials. Now the company wishes to challenge the order before Honorable High Court. So the question for discussion is whether the order of AAAR can be challenged before High Court on merits.
Archit, if you permit me,
hello.
we are not on advance ruling.
Sir.
We are on the job work. So will you bypass this question? Otherwise, it will take a lot of time.
There are many more questions on.
We can, sir. We can.
नहीं क्या है अर्चित का कंसर्न ये है कि बॉम्बे हाई कोर्ट has initially said that GST law does not provide for an appeal against the AAAR. Correct, Archit?
Yes, sir.
Yeah, that was his concern. But I think the Karnataka High Court and Delhi High Courts are admitting appeal against the AAAR judgment. Correct? And as Archit has rightly said, the Bombay High Court has again directed AAAR to reconsider the decision. Correct, Archit? Can you just throw light on that and just finish off this? Yeah, please.
So, sir, I'll just take you quickly so that we'll not open it for discussion.
Yeah, please.
So basically, in JSW Energy, Bombay High Court observed that, and this is very important, this highlighted portion in para 17. In appropriate authority and another versus Smita Sudha Patil and another so and so, the Supreme Court has held that merely because no appeal is provided for against the order of appropriate authority directing compulsory acquisition by the government, the supervisory power of High Court does not get enlarged, nor can the High Court exercise an appellate power. They said that the High Court can intervene to see whether the process by which the matter was decided was correct or not. So basically, they will only review the decision-making process and they will not go into the merits or demerits of the case. So that is why they said that the AAAR did not follow the proper judicial process. That is, they should have given an opportunity when they are going on a completely different ground. They should have given an opportunity, to the applicant to present their case against that new ground, which was not provided, and therefore they remanded it back. And they categorically stated that we are not going into the merits or demerits of the case. And if you see, sir, in Bhat Healthcare, the issue was with respect to taxability under GST again. So AAAR had given some ruling, whatever it may be, and the applicant decided to challenge it before Kerala High Court, which was admitted, and in fact an order was passed by the Kerala High Court. This is the final observation of Kerala High Court. So again, Kerala High Court has admitted it and they have passed an order. Sir, one important case law, this is by Delhi High Court, not from GST regime, but it's an earlier case. I'll just read the relevant portion from here. Before we do that, we would like to touch upon the well engrafted principles with respect to exercise of writ jurisdiction by courts in such like matters, especially when superior courts exercise the power of judicial review in respect of orders, decisions, or in the instant case, a ruling of administrative quasi-judicial authority or a judicial authority. It looks at the decision-making process and not at the decision itself. A superior court is not expected to substitute its view with that of the authority whose decision is impugned before it, as long as the view taken by the authority is a plausible view which is free from errors of jurisdiction or errors apparent on face of record. Then they have relied on various other judgments and the Halsbury Law Book and all, and they have concluded that if there is an error apparent on the face of record or an error of jurisdiction, then yes, a writ petition can be admitted by the High Court or Supreme Court. This was what was finally concluded in this judgment by Delhi High Court. So yes, sir, Bombay High Court has a different view. Other high courts are admitting appeal against AAAR order, and so this issue is still going on actually.
Yeah.
So there is a difference of view between different high courts. Okay, we'll move to next case study. DEF Private Limited, a principal sent certain goods for job work activity to its job worker. Now the job worker could not return the goods within the period of 1 year, and therefore now DEF wants to pay tax on the same along with interest as per the provisions of section 143. So now DEF wants to know what will be the value on which tax is payable. They have shared the following relevant facts. They have purchased the goods at 10,000 rupees excluding GST. Then they sent it to the job worker. At the time of purchase, they paid a commission of 500 rupees. 1,000 rupees rent was incurred for storing the goods for some time. And transportation cost was incurred 150 rupees while taking the goods from vendor's premise to his own factory and 100 rupees from transporting from his factory to job worker's premise. Now the question is, on what value DEF should pay the tax after the expiry of 1 year period? On the basis of these facts, what will be our advice?
Before actual discussion of the valuation, I would like to add one point here.
Yes, sir.
By Amendment Act 2018, Section 143(1) has been amended to provide for a second provision has been added, which says this 1 year, 3 year time limit can be extended by the commissioner in the reasonable cause is shown to him. Whereas the subsections 143(3) and 4 have not been given effect to that. Subsection 3 and 4 still says if the goods are not returned within 1 year from the date of its removal, it amounts to supply. Now, what is the use of making such amendment? I think it is an inadvertent error wherein this subsections 3 and 4 have not been amended to that extent. Otherwise, if we read section 143(3) and 4 without considering the amendment made to section 143(1), the amendment made to section 143(1) become redundant totally. So as per the principles of interpretation of a legal statute, we cannot interpret any provisions of the act to make other provisions of the same act redundant. So considering this, I am of the opinion, even if no specific amendment has been made in section 143(3) and 4, we need to understand this 1 year time limit, 1 year and 3 years time limit. If it is extended by the commissioner by another 1 year or 2 year respectively, then this extended time period also should be considered for the purpose of this deeming fiction of supply. Archit, any view on this?
Sir, I agree that that 143(3) they have missed that amendment, and if we don't read it along with this explanation added in 143(1), then the purpose will fail. There's no purpose of that amendment at all. So I agree that it should apply even to 143(3) and 4. Now, sir, for this query,
you can consider beyond this specified time.
Correct, sir. Correct, sir.
I think Prakash Bhai from participants wants to speak.
Yeah, please. Naresh Bhai, you want to add something before him?
No. I was on this query only. Valuation ka query.
Okay.
Yeah. Prakash Bhai, let other
participant, please.
Yeah, with
Prakash
respect to.
Yeah, Ravi speaking.
Yeah, sir.
Yeah, please.
Yeah, with respect to valuation, vis-a-vis the valuation is concerned, the value of such deemed supply should be the value declared in the challan by the principal. So at the time of originally whenever the principal is sending those goods to the job worker, whatever value he has disclosed in the challan to be sent along with the goods, that will be the value which will be considered for discharging the tax liability after 1 year.
Okay.
So may I come in?
Yeah, sure.
Yeah. So according to me, since 143.3 is a deeming fiction, wherein it says that it shall be deemed that such inputs have been supplied by the principal to the job worker on the day when the said inputs were sent out. So it will be considered as a supply. So when I'm considering it as a supply, I will consider the valuation from the purview of section 15. And here, since it has been shared, there's some incidental expense that have been paid, like the commission, the rent, and the transportation is there. So maybe as per 15(2)(c), all this will be clubbed together, added together, and the total valuation will come to that particular figure, which is around 11,750. 11,750. So according to me, the valuation of 15(2)(c) will be considered, and all the expenses which have been incurred, even during the phase from the date of purchase till the date the 1 year is getting expired, because the rent has been paid most probably for storing the goods during this period. So all has to be clubbed, and on this particular amount, the supply has to be shown.
Prakash bhai, you want to come in? Yeah, you will have to unmute yourself, sir. I think he is unable to speak. Raju sir, you can go forward.
Yeah, first of all, I'll not be on the valuation. Only I want to speak about 143.3, that the time limit of 1 year is over, then the input, the deeming fiction, this will be treated as a supply. The only thing is that the section is concerned, it talks about on the day on which the inputs were sent. Virtually, law cannot impose an impossible condition. Honestly speaking, you will come to know only after 1 year that you could not able to fulfill the criteria, and that cannot make you, pay the taxes retrospectively. It will have various effect even on the ITC part, etc., because it is conflicting with the other sections. So my view is concerned. Of course, it is a statute law of land as of now, but it needs to be harmoniously interpreted, and court will perhaps would be reading it down to that extent that suppose 1 year is completed today, and if I treat this as suppliers today and make the payment, because I'll require invoice also to that extent, because it is a deemed supply. So deemed supply is concerned, I am eligible for the ITC also to that extent as a job worker. So I'll require invoice from the principal, which has never come to me. The supply is always backed by invoice. So I personally feel that it should be a supply when the 1 year is over, and the invoice should be raised on that date. And there is no question of making payment, interest, etc. to that extent. That is what is my.
Can I come for valuation now, Vasant bhai?
Yeah, please.
See, I believe that this job worker and the principal are not related persons.
Yes, sir.
The first presumption is this: are not related persons. Why not the transaction value? Whatever transaction value principal puts it, why not it? That is my simple question to Archit and Vasant bhai. I will go for whatever may be my cost. Whatever may be my cost, I can put double the cost or I can put half of the cost also. It is basically a transaction value that I am entering into. There are no provisions which says, there are no rules are applicable. Rule 27, 28, 29, 30 are not applicable in this kind of a case. So, is it that I will be wrong in putting the transaction value? That is what, I just wanted to put a poser to the faculty as well as the chairman.
Yeah, as you rightly said.
Yeah. Let Archit speak, Vasant bhai. Let Archit know.
Yeah. So, sir, in fact, that is also the second query. As DEF and job worker are unrelated parties, can the transaction value be ₹1?
हाँ, तो दोनों का साथ में जवाब दे दो ना यार.
Okay. So, sir.
With reasoning का boss, ऐसे नहीं हाँ या मैं नहीं, reasoning के साथ में दोस्त चलो.
Absolutely, sir. So, sir, someone had raised the point. Sorry, I forgot the name with respect to section 15(2)(c).
Yeah, 15(2)(c). Yeah.
Yeah. So, actually 15.2 says the value of supply shall include, A says any duties and taxes so and so if charged separately by the supplier.
Yeah.
So B says any amount that the supplier is liable to pay which has been incurred by the recipient. Okay. C says incidental expenses including commission and packaging charged by the supplier to the recipient of a supply. Okay. So basically what I'm trying to say is that section 15.2 A, B, C, D and all these will apply when a supplier is charging something to the recipient and it is recovering separately. So section 15.2 takes care of that you should not collect any money in the garb of any other item by saying ki, no, these are packing charges, no, these are
Absolutely.
taxes, and therefore
Absolutely.
to plug that loophole, section 15.2 says ki, okay, anything you are charging in the name of maybe taxes, maybe commission, maybe incidental expenses, then all that will be included in the value. Okay. So that is why, in my opinion, that will not directly apply in this case because the principal over here is not charging anything from the job worker. Now, when we see now when we come to the rules, now rule 27 says value of, sir, it's visible on my screen, rule 27 and
Yeah.
yeah. So the rule 27 says value of supply of goods or services where the consideration is not wholly in money. Now, in this case, there is no consideration at all. See, the law has deemed it to be a supply. Otherwise, it was never a supply from me to the job worker. I have given my goods for him to act on those. So there is no actual supply. So Rule 27 cannot apply in this case because there is no consideration at all. There is no question of wholly in money or partially in money. Rule 28 says value of supply of goods or services between distinct or related persons.
Not applicable here.
Not applicable. 29 applies when goods are made or received through an agent. Again, not applicable. Rule 30 or 31 can apply in my view. Rule 30 says where the value of a supply of goods or services or both is not determinable. Now, this is deemed to be a supply by law, and therefore where the value of supply of goods or services or both is not determinable by any of the preceding rules of this chapter, the value shall be 110% of the cost of production or manufacture or cost of acquisition of such goods or the cost of provision of service. So in this case, the goods are not being manufactured. So the cost of acquisition of such goods, when the principal is supplying it to the job worker for job work activity, the law says it's a deemed supply. I have acquired these goods from market and given it to him. So the cost of acquisition of such goods on that 10% markup should be added as per this rule. Or if I may go at rule 31, the residuary rule, which says that it shall be determined using reasonable means consistent with the principle. So there are two possible outcomes in this. If we apply rule 30, then the cost of acquisition, if we say, then the purchase price is of course the main cost, and then the purchase commission and the transportation cost from the vendor's premise to my premise will add up to the cost of acquiring those goods. And if we say ki rule 31 applies, then the reasonable means, then in my view it will be only 10,000 rupees, which is the actual cost of the goods, because that is also the open market value of these goods. So that gives a more logical value to this supply instead of adding the other costs involved. But of course, if we go strictly by the literal rule, then it says rule 30 should come first and then rule 31. But then it will defeat the purpose. The whole purpose is that on the open market value or on the value of the goods, the tax should be payable by the principal. That is what section 143 envisages.
Archit, rejoinder here.
Yes, sir, please.
You can apply the rule 30, 31, provided you are falling in rule 27, 28 and other rules. See, basically rule 30 says where the value of the supply of goods or service or both is not determined by any of the preceding rules.
Right.
Rules of this chapter. तो पहले जो है rules का applicability आना चाहिए 27, 28 और उसमें आप you are not able to determine, then you are going to 30. My contention or humble submission is this: there is no case here to go to the rules. We are falling straight in section 15.1. If the it's a transaction value 15.1 से ले 15.1 to जो भी apply होता है, let us apply that. the rule comes, you know, where rules comes where, you know, either you are a related party or it is a without consideration. Here now the law says it deemed supply. So see, आप देखोगे ना, this is not been put in the schedule. This particular provision is put under 143, correct? It has not been put in the schedule.
Right.
So in my view, rule does not come at all in the picture over here. Either, you know, you have to go by the section, the primary sections of section 15, 1, 2, 3, 4, because 5 में पढ़ने के लिए, you know, 15, 1, 2, 3, 4 में नहीं आता है तो ही 5 में आएगा, that then the rule will take over करके. This is what my view, Archit. I may be wrong, I may be grossly wrong also, but this is my view.
Yeah, see, GST is payable on the transaction value. What is transaction value has been defined in section 15. And transaction value, as Naresh Bhai said, is not applicable only in two cases. One, where transaction is between a related party. Other one, the consideration is not the sole consideration.
Yes.
In this case, as Ravi said in the beginning, when sending the goods to the job worker, the principal has to mention the value of the goods in the challan. The value, how it has been arrived at, unless the principal gets something in return as additional consideration, then what is mentioned in the or self-declared in the challan, we cannot say that this consideration is not the sole consideration. For defeating the sole consideration aspect, there has to be something must be flowing back to the supplier, which is not there in this particular case. There is no consideration at all. It is self-declared. The principal, he himself says, this is the value of my goods. But by deeming fiction under section 143, if the goods are not received back after processing or otherwise within the specified time limit, the provision makes it a supply in order to ensure that there is no misuse of this provision or any other fraud or such things are being done under the grab of this job work. That is the purpose of that particular provision. Hence, as long as there is no additional consideration flowing back to the principal, whatever value he has mentioned in the challan at the time of sending the goods to the job worker, that itself should be considered as the transaction value, and there is no reason for going for the valuation rule, because we are not defeating the section 15 or we are not non-complying the section 15. This is what my view.
Okay. So basically, sir, whatever value was declared at the time of challan or even at the time, so that value may be 10,000 rupees, because that is what was the purchase price of the goods.
Yeah.
So on that value, he may have to pay tax as of now.
Correct.
Yes. So next, in this itself, what will be I'll just read it from the top first, the continuing part of this query. Now, when the job worker is returning the goods back to the principal after 1 year, on what value the tax will be paid? The job charges for the services provided by the job worker are rupees 200. Whether such job charges will be separately taxed at 12%, or whether it will be added in the value of goods and payable at 28% rate. Whether 10% as per Rule 30 is to be added on such value.
Archit, can you explain the case or issue again? I'm not able to understand.
So sir, the first part says that after 1 year.
First part okay. समझो कि मेरे को budget वापस नहीं आया.
So now जब वो सर वापस भेज रहा है after 1 year.
After when he's returning back, job work भेज रहा है ना, job worker भेज रहा है ना.
Yes sir. Yes sir. So again, job worker will again have to pay tax on the supply. So the circular also says that after 1 year, the principal should pay supply on the supply along with interest, and the job worker, while returning the goods, should again pay tax on that as a supply.
Correct.
And of course, job worker can take credit of those. So now the question is on what value he will pay. his job charges are 200 rupees, which were otherwise taxable at 12% rate.
Agree. Now,
And
now
the
I got the issue. Yeah.
Yeah, and the goods are chargeable at a 28% rate. So what will be the treatment, and whether again additional 10% is to be added on this while returning the goods?
Is it that I will put the issue in a simpler manner? Is it that the job worker is returning the finished goods as if he would have returned in the, suppose the time में return किया होता, so you would have only charged the job worker charges, correct? Huh?
Correct.
Now, see what is returning now. Can we say that he is returning your inputs back only, and on the top of it is charging the job work charges? So only the input is supplying the input. He is not supplying back the finished goods, in my opinion, because finished goods was always belonging. It was always belonging to the principal. So I say very tricky question. So let the people discuss it, and then expert comment by you and Vasant.
Nilesh bhai, you can unmute.
I think, see, the job worker will have to include the value which was charged by the original party while sending the goods for job work, because otherwise claiming of this ITC also, see, when the party will pay, that manufacturer or the original party who had sent the material to the job worker for doing the job work, when he raises the invoice, the credit of that ITC comes into the account of the job worker and not of the main party. Now, when job worker, if he raises a bill which will include that plus his charges and re-invoices them on the manufacturer as a sale, again another supply of the said goods, then only ITC can be claimed by that other person. No, otherwise, even availing ITC will be a difficulty if you are only trying to charge on the differential amount. I hope I'm clear.
No, Nilesh bhai. At least to me, it is not clear.
No. What I mean is, suppose, say A has supplied goods.
Don't link with the ITC. Simple link it. See, today is the only question of valuation.
Okay.
When the job worker sends back the material, is he sending the inputs and inputs back, whatever inputs which he got it from the principal, he is sending it back after duly processing. So he is charging only for the inputs, for what he got charged by the principal, and he charges 12% job work. Or
no, I think once the supply is received by him, deemed to have been received by him, then he also makes a supply.
So in that case, you are charging a finished goods per charge karuja, that is 28%. Correct?
Yes.
Yeah. That is what your answer is, Karina. Yeah.
Yes.
Okay.
Sir, I think whatever we discussed for the first leg of the transaction, that is supply of goods from the job worker, from the company to the job worker, similarly, this transaction should also take place, like whatever we discussed, the taxability and the valuation.
No, Kush, you are missing one point. The character of the goods. Is it now, you will treat it as a, see, finished goods, you will be treating as a finished goods which is supplied by the job worker to him, and he will not charge for the job work then. He will charge only for the finished goods.
No, sir, there are two elements that he is supplying. One is the supply of service, that is the processing what he does.
That's what
second is the supply of goods which is otherwise exempted subject to the conditions, and because of non-fulfillment of conditions as prescribed under the law, it again becomes a normal supply.
So in simple sense, 10,000 rupiya upar whatever rate was there input ka, barabar hai? And job work ke upar
or whatever open market value, there are 2-3 views on that. So
yeah. Whatever,
I think open rule 30 or
yeah. Then you will be charging, on the inputs. Hello, you will not treat the finished goods. Because in given case, Archit's case, finished goods are at 28%. That is what he has put it very clearly.
Yes, sir.
No,
So, sir, I think what
the
Kush is
goods
trying to
sent,
say,
the goods sent to the job worker itself is liable for 28%, right? Whether it is
Right.
finished goods or raw material.
right.
No, but when the job worker is sending back, he is sending the fee of that commodity would apply. And what is the underlying supply? That is the
That is the finished goods he's supplying.
finished goods.
The processed goods, whether whatever processing after that, he's supplying it back.
Finished goods, समझो ना अभी for our example take finished because your finished goods are 28% ना boss. Hello.
Yes,
To
sir.
put it in other way, when the goods are to be sent back by the job worker, whether there would be two supplies. One is job work, service, supply of service.
Yes.
Other one
Right.
is supply of goods. This is what the crux of the matter is.
Right.
Yeah.
If you treat it the finished goods, then the job workers are subsumed in that value.
Any other participant?
Yeah, sir, once we treat it as a deemed supply, then of course at the first limb, what will happen will principal will raise an invoice, tax invoice. So naturally at that time, the ownership will pass to the job worker. And then thereafter, since now the job worker is the owner of the goods, because unless and until that is done, the mechanism of ITC also cannot happen. Right. So once now the ownership passed to the job worker, he will issue a fresh invoice vis-a-vis this manufactured product is concerned or new item is concerned. And accordingly, the rate of 28% should apply to it.
Right.
I think Archit, you can conclude.
Yeah. Yeah. So, sir, there is one circular dated 26 March 18, circular number 38 by 12. I forgot to insert that in the slide, but in that also they have discussed that if such goods are returned by the job worker after the stipulated time period, the same would be treated as a supply by the job worker to the principal, and job worker would be liable to pay GST if he is liable for registration in accordance with the provisions of the Act. So when he is returning the goods back, then he will add the job charges, and on the full value he will charge 28%, irrespective of the fact that the job charges may otherwise be subject to 12% rate of tax. So
कौन सा circular है? 38 number का circular बोल रहे हैं तू?
38, yes sir.
38 ना?
Yes sir, yes sir. 38 by 12 by 2018.
26 मार्च वाला ना?
हाँ sir. Para
Okay.
9.6.
Okay,
Para
okay,
9.6.
okay, okay.
Yes, Vasant sir, your final view.
Yeah, I agree with what you are saying, as well as the logic of what Ravi said. When by issue of invoice due to deeming fiction of section 143, the title in the goods passes on to the job worker.
Yes.
When he has to return back, again he has to follow the same process. And as far as valuation is concerned, when it is supply of goods, it should include all related things. So job work charges also should be included in the value, and there won't be split of two supplies. One is service supply and one is supply of goods. It will be supply of goods only while returning back. And the more challenge arises if the job worker is not registered. See,
Right.
the definition of job work says the supplier, the principal manufacturer has to be the registered person. If job worker is not registered, then there will be challenge with regard to the taking the ITC.
Right, sir.
Back on
So that
what
I
is
have covered
paid.
in next case study. We have covered that
Sure.
actually.
Yeah. So
Yeah.
that is the issue, and I agree with what Archit said. Go ahead.
Okay. So we'll move fast now. Case study 4. A job worker did not return goods within 1 year, and hence the principal wishes to pay the tax on the same along with interest. Now in June 2021. So now he wants to pay the tax. The goods were sent on 1st August 19 and has not been returned till date. The job worker is unregistered and wishes to take registration now. So question is, will the job worker be entitled to claim ITC of the tax charged by the principal for goods sent in August 19? And second part of it is, the job worker also wishes to claim ITC of services received in last 1 year, like rent for premises, accountant fees, etc., which was not claimed as it was unregistered earlier. Can such ITC be claimed? So basically, the job worker wants to take registration now and claim ITC of the tax which will be charged by the principal on the goods. Along with that, he also wishes to take ITC of the services which he had received in say last few months or year on various charges like rent or accountant fees, courier, telephone, whatever may be.
May I add?
Yes, sir, please.
Yeah, first is concerned here, the job worker is concerned when he's taking registration now. I presume that it is before the invoice being raised, because invoice is raised on current date.
Yes,
So
before the invoice being raised by the principal.
Yeah, so this is a deemed supply, and it has taken the character of supply only when 1 year got completed and invoice has been raised. And if the registration is taken before that, there is no doubt about that he will be able to claim the ITC for the goods part is concerned. Now the second is concerned previous 1 year's expenses, that is input services. It is only the registered person is entitled for ITC as per section 16. So, and all those services were supplied at relevant point of time, which is supported by invoices. And I presume all those invoices are dated prior to the date of his registration. So supplies also happen and invoices correspondingly also has been raised. To that extent, for him to get the credit of ITC is virtually impossible because he is not fulfilling the criteria of section 16. It is only the registered person who can claim the ITC.
Okay.
Also, Archit, while passing the credit in that GST or 2A statement and everything, it will their TIN and everything will not appear. So basically, there is a cutoff in GSTR 1. Those who are not registered as on date of filing of GSTR 1, I don't think the system accepts the TIN number. So that section 16 plus this procedural also, it will be a challenge.
So so of course the service providers must have treated it as a B2C supply at that time. If they amend it now and show it as a B2B supply?
I don't think system accepts that. So they are tagging the date of grant of registration. So before those transaction, system will not allow only even to revise it.
Kush, but going to system, but whether statute allowed, first of all, that we have to see. No?
Yes, sir.
That statute also does not allow, plus this portal will also not allow. Both the things.
That Krishnan keeps on saying portal immortal, na? So let us not talk on portal. Na?
Anyone, sir? Naresh, sir?
In my opinion, how come you can see, as far as when once you take a registration and invoice is received by him, उसका तो क्रेडिट आपको मिल जाएगा, लेकिन आपको ये जो सब अकाउंटेंट का क्रेडिट लेना है पर अर्लियर पीरियड का प्रायर टू रजिस्ट्रेशन, that in my opinion will not be able to get it.
So sir, section 16 says every registered person.
Yeah.
Can I not argue that I am taking the credit now after taking registration? Or is it to be read that I have to be registered at that point of time? I am taking the credit now as a registered person. I have asked my vendors.
I agree with you. You are saying कि आपका ये सब इनवॉइस को 1 साल नहीं हुआ है, चलो बराबर है.
बराबर है. और मैं इनवॉइस को भी अमेंड करवा लूंगा उनसे बात करके कि now
so on that basis you are taking.
Sorry, sir. One more important point in this is, and so whatever supplies. So basically, see, the whole purpose of SENVAT all along is that you are entitled to take credit provided you pay tax on your outward.
Correct.
Okay, whether it's a supply of service or manufacturing of goods or whatever.
Agree.
So if I say that during this 1 year period, whatever job charges and all I have incurred, whatever job charges I have earned, all that I will be adding now when I will be supplying the goods back to the principal. So it's not the case that during this last 6 months or 1 year I have earned some income on which I have not paid tax under the garb of being not registered. If that is the case, then of course, then you cannot argue that now I want to take credit also. I'm saying in the last 1 year, whatever income I have earned, as a job charges, all that is being added. Now when I'm supplying the goods back, it will be added and I'll be duly paying GST on the entire value. The whole question remains whether of course, portal issue, what Kush has highlighted, will be there, no doubt in that. Apart from that, legally, can I say now I am a registered person and I am claiming the tax, or do I have to be registered at that point of time only then? Sir, you may be aware earlier also under excise, under SENVAT rules, there are judgments.
Yeah,
But
yeah.
of course,
Ram Sarup Electricals and all the judgments were there.
many
Landmark
judgments are there. Yeah, before registration, credit is allowed. But of course, Rule 3.1 said a manufacturer or a provider of service. It did not say a registered person or something.
यहाँ GST में registered का concept है. Yeah.
हाँ, अब ये section 16 में बोल दिया every registered person. So the only question which remains is, can we say every registered person shall be entitled to take, means he should be registered at that point of time or even today after taking registration?
Yeah, Archit, I will go on the old jurisprudence only. Old jurisprudence में भी क्या था कि you have to see the eligibility of the ITC credit on the date on which you take that services or you buy that inputs. So if on that day, if I was not registered, see, we have the Grasim case also, Supreme Court case, the day on which I bought the machinery, and at that time, if I was in an exempted supply, manufacturer of exempted supply, in the next year, if I that supply that that product itself become taxable, can I take that ITC of that machinery? Then in that case, I think it is a Grasim case only, where the Supreme Court has said that you have to see the availability of the ITC on the date on which you have received the goods or services. So the date on which you have received the goods and services, you are not a registered person. So I will take a position कि मैं accountant का नहीं लूँगा. If I am registered and thereafter I get that deemed supply का invoice, I should get it. That is what my view is.
Okay.
I will see the status on the date of receipt of goods or services or capital goods, input services or capital goods. This is my guiding factor will be that.
Okay.
So I would like to add here that section 16.2 prescribes 4 conditions for eligibility of ITC.
Ravi.
Section 16.2 prescribes 4 conditions.
Yeah.
All those conditions may be satisfied. I mean, those are pre-conditions or post-conditions. So it is only a registered person, which section 16.1 says. So on the date of deemed supply or prior to that, if I get myself registered and then the invoice is there, all those 4 conditions in sections 16.2 may be condition precedent or condition subsequent. Still I will be eligible for.
Yes. उसका कोई issue नहीं है. अपना ये accountant का issue है ना बहुत सालों.
One more thing can I say here? When Ravi was saying that all the condition of 16.2, that clause number D, he has furnished the return 39 under section 39. So if it is for say 6 months back and he is registering now, will he be furnishing returns for the earlier period? How will he be furnishing? He can show as an arrears, etc. is fine, but it will not be for that tax period for sure.
Can annual return may not be treated as return, Rajiv bhai?
No, annual return is obviously not a return, sir.
No, it says under 39 only. Sir.
39 only.
Only says only 39.
Annual return, you can't avail ITC through annual return. It has to be through periodical return specified in 39.
Rajesh sir, here the return has to be paid means return has to be filed means not for that tax period, the period for which credit is taken.
Yes, I agree with you.
So.
Yes.
No, see, Vasant sir, one has to read this way. Today I have availed your services, either input service it is or no, I have to find out on that day. And section 16 is only section which lays down condition for eligibility and condition, which Naresh bhai stated, and I agree that it is on the day on which you receive the services, that day you have to see your eligibility. Now on that day you are registered or that one part of it. And even you see, you may not take credit in this month. That's a different thing, because there's a time limit given to avail the credit. So you are using that facility or your liberty is there that you can avail in next month or up to certain time limit. Okay. But then your eligibility criteria is one thing that has to be tested today. So return has to be considered in that fashion, I personally feel.
I would say there is one more challenge. See, on the date of supply, if the recipient is not registered, then in the invoice of the supplier, the certain details would not be mentioned, like a registration number, importantly.
Correct.
Rule 36 says, unless the relevant information is specified in the invoice, the eligibility for Sunmat credit would not be there. Especially sub-rule 2. So subsequently, if the registration is taken, but the relevant information not being there, of course, it's a procedural issue. We can always argue the procedural non-compliance cannot take away the substantial benefit. But of course, this challenge would be there, in my view.
Similar provisions were there in the VAT regime also regarding set-off.
Even in Sunvat credit rules, rule 9.1 and 9.2 were there.
No, set-off prior to your registration, set-off was not eligible. That is at par with your GST provisions.
Yes,
Correct.
yes.
I agree.
VAT mein tha, yes. VAT mein tha, yes. And these provisions are inherited from the VAT law only.
No, but under VAT law, there were this administrative reliefs available.
Yes.
When you do my assessment for URD period, then if you are able to produce your invoice, wherein you have paid taxes, then they were giving you the credit while assessing your URD period liability.
Because the specific powers were granted to the officer. Yeah, their
yes.
powers are not
No, I'm just trying to bring that.
Agree. Nilesh bhai, we appreciate. I appreciate that.
Similar provisions are absent in GST.
Yeah, such
administrative relief sort of thing.
Provisions are not there. Enabling provisions are not there. So Archit, 645 ho gaya hai, you know.
We are less than 50%.
Okay. Now you remember my words. मैंने तेरे को बोला था ना.
Yes, sir.
Yeah, come on. Yeah, please.
Okay.
So Vasant bhai, how you want to go now? Is it, see, there are two methods of doing it. Question 5, 6, 7, 8, 9 तक गया ये अपना अर्चित, बराबर है? So would you like to restrict your views and Archit view and finish off this thing करके कैसे करेंगे?
I think the purpose is a group discussion. We have to have a detailed discussion. To the extent, it is not that we need to cover all.
No, that is right. But in that case, we are losing the other important case studies also. So it is up to you and Archit to decide.
We can extend some time, right?
Vasant bhai, Chairman sir. Chairman sir, what I am requesting is, right now it is 6:55. We can extend by another 15 minutes or so. So you are roughly around 20 minutes or
20
so.
minutes. Yeah.
And there are about 3 to 4 case studies left out. I will suggest that in every case study, Archit should bring the facts. He should give his view. And Vasant bhai, you can have some, you can give your remarks to that rather than discussing, because it is, we don't want to miss those case studies also. And of course, discussion everybody would have loved, but we have to also, respect the decorum. And every meeting we cannot extend. So 15-20 minutes, that's fine, sir. 7:15, you close the session to the extent, and that's how it should be done.
Sure. And about the discussion, study circle होने के बाद में लोग discuss करेंगे यार. अर्चित ये बराबर नहीं बोला है, वसंत बराबर नहीं बोला, वो होगा discussion. Don't worry about that.
Yes,
fine. Go ahead, Archit.
Okay. So case study 5. ABC is a manufacturer of footwear. The company has appointed PQR, a proprietorship firm, for activities of stitching shoes, polishing it, and adding finishing touch. Now, PQR does not have its own premises and has its labor working under its own supervision at the factory of ABC Limited. PQR is not using its own goods at all and is working only on the goods given by the principal, that is shoe, stitching thread, polish, etc. PQR recovers charges on per man-hour basis for the services provided. So I'll again summarize. Basically, PQR is not having its own premises. He just gives his labor who works in the factory premises of ABC itself for manufacturing shoes, and they do the activity of stitching polishing and adding finishing touch. Now, company has approached AAR by saying that the activity amounts to job work and they are liable to pay 5%. So this is the rate entry. Services of job work in relation to manufacture of leather goods or footwear falling under so and so. So they feel that this is covered under job work activity and taxable at 5%. However, AAR observed that since PQR is only providing labor and charging on per man hour basis, the activity is covered by manpower supply and does not qualify as job work service. Accordingly, as per AAR, it will be taxable at 18% rate. So the question is whether the stand of AAR is correct, and if the job charges are recovered on per piece basis instead of per man hour basis, will the answer change? So
to put it in another way,
yes,
the consideration or quantification of the consideration will make the things different. That is the crux.
Right. So, sir, there is one important case law, which is Radico Khaitan. In this also, what had happened was the company had paid the charges, they paid the service tax actually as manpower supply. And then later on they said ki no, we are a job worker, and therefore they claimed refund of the service tax paid as manpower supply. And this is what the crux of the observation of tribunal. In the case of Maruti Udyog versus so and so, it was observed that the terms and conditions of various work orders clearly spelled out a master and servant relationship between appellant on one hand and the fabricators on the other, as the appellants have right to tell the fabricators that what to do and how to do. In other words, works have to be carried out under the total control and supervision of the SSE, SSE being the principal basically. As such, fabricators are held to be hired labor and not independent manufacturers. So basically, all along during service tax also, there was a difference between who is a manpower supply service and other than that, because this issue came whether it's a security service or manpower supply, whether it's housekeeping service or manpower supply. So always the question was under whose supervision the person is working. Okay, in this case, the labor is working under the supervision of PQR, that is the job worker. And merely because the charges are recovered or per man hour basis, the consideration cannot determine the taxability. The basis of consideration cannot determine the taxability. So in my view, the services will qualify as job work, and therefore the rate applicable will be 5% and not 18%. And the answer will definitely not change if it is recovered on per piece basis. Then so it becomes more clear that the charges are also on per piece basis. Even if you see this line in the beginning, the company has appointed PQR for activities of stitching shoes, polishing it. So they have been specified this role that you have to do stitching, polishing, and adding finishing touch. They are not appointed just merely to provide labor and work under their supervision. Yes, Vasant sir, your views on
Yeah. The nature of transaction needs to be understood based on the terms of the contract. Merely the payment method, it cannot alter the nature of supply. The contractual responsibilities are determinative of the classification of service. And there is one Supreme Court decision in case of Mahindra and Mahindra, wherein it is said the contract has to be interpreted in a manner from the apparent tenor of the agreement, and apparently it has to be accepted as the real state of affairs. So when there is a clear understanding between the job worker and the principal for the job work purpose, the manner of method, it cannot alter the nature of supply. It has to be understood as job work only. I agree with you, Archit.
So we'll move on to next case study, sir. XYZ Private Limited sends yarn directly from vendor to job worker 1 for converting it into fabric. In that process, there is waste generated. Say, for example, 1000 kgs yarn is sent to job worker 1, then he will convert it into fabric, which will be 98 kgs, and balance 2 kgs will be waste generated. Job worker 1 then sends the same to job worker 2 for dyeing and finishing activity. The process of dyeing and finishing is measured in meters. So in this example, job worker 1 will send the goods, which is 98 kgs, to job worker 2, which will be measured as say 500 meters. In the process of dyeing and finishing, the fabric gets shrunk by 3 to 4%. Hence, against 500 meters, job worker 2 will return only 480 meters. So there is no wastage in this process. As such, there is no waste generated. But yes, the fabric gets shrink. After dyeing activity, the fabric is returned by the job worker to XYZ. So basically, from job worker 1, at the end of job worker 1, there is a waste generated, and at job worker then job worker 1 will send to job worker 2. There is no waste generated, but the fabric itself gets shrunk. So the actual material sent maybe say 500 meters to job worker 2, but he will be able to return only 480 meters. Okay. So now the following questions have been raised. The waste generated in process carried out by job worker 1 is retained by the job worker himself as he wants to use it in other business activity. XYZ has allowed the same. What is the GST impact on this transaction? So sir, we'll go step by step. I'll discuss this first query, otherwise there'll be a lot of mix in this. So as regards waste, 143.5 says, notwithstanding anything contained in subsection 1 and 2, any waste and scrap generated during the job work may be supplied by the job worker directly from his place of business on payment of tax, if such job worker is registered, or by the principal if such job worker is not registered. Now, in this case, what is happening? The waste which is generated at the end of job worker 1 will be retained by him, and he will use it for other business activity which XYZ has allowed. So, in my opinion, the principal will have to pay tax on this because it is like a waste supplied by the principal to the job worker himself. And as 143.5 says that on supply of waste, either one has to pay the tax. So the principal may pay the tax on this. And the other effect of this should also be on the job charges, because this is more like a barter. When he has allowed it to use it, he's not paying separately for those charges. So the job charges should also be inflated to that extent. And while the job worker will pay tax on that, he will add this value and pay 12% or whatever is the rate of tax on that. Sir, your comments on this?
Yeah, I agree with you. Go ahead. I have no different view.
Yeah. Second is, if the scrap generated in process carried out by job worker 1 is lost by the job worker, then what will be the impact under GST? Now, sir, there are two parts to this. Actually, the question does not bring that out. So suppose if the job worker was going to retain it, as we discussed in query 1, then in my view, again, there will be same impact, because if he was going to retain it, but he has lost it, so again, someone has to pay tax on that. And as a principal, I will pay tax, and being barter, job worker will also add it to the value of his job charges. And suppose he was not going to retain it, he was going to return it to me. Then I may recover some charges from him as a penalty or whatever. Then 143.5 does not apply, and there will be no tax on it. So suppose he was going to return it to me, he has lost it, so there is no supply as such of this waste. Therefore, there should not be any tax on that separately. And on the charges which I'll be recovering from him as a penalty or whatever for losing those goods, that's an altogether different issue, whether it's tolerating an act or whether it's whatever, whether it's a separate supply or not. But in my view, as far as job work is concerned, 143.5 will not apply if he loses those waste. Sir, if you want to add anything to it, or should I move ahead?
See, in this case, how it is being lost, whether it is in the process it is lost, or subsequently
subsequently after the waste, it was generated, and
subsequently it is lost.
It got lost, yes.
Yeah. So in this case, as per the rule, provisions of section 143.5, the scrap generated should be returned, or it should be disposed of by the supplier or the job worker. So in the absence of that, there would be tax liability. The principal may have to pay the tax. When he pays the tax, there may be an issue with the job worker. He may not be able to take the credit on that because it is lost.
Right.
Section 17(5) may hit. So it will be a contentious issue.
Okay.
With regard to ITC. And as far as non-return of the or non-clearance or non-supply of the waste generated during the process, of course, that will be liable for GST. I agree.
Okay. So next is if the scrap generated in process carried out
Yeah.
by job worker one is not marketable at all, and so he just simply disposes it off, then what will be the impact under GST? So, sir, in my view, section 143(5) says when the scrap generated during the job work is supplied by the job worker, then someone has to pay tax, either the principal or the job worker. So if the scrap generated is not marketable at all and it has just been disposed of, in fact, he may have incurred certain expense to call some person and to take it away. In such case, there should not be any GST impact. There should not be any GST liability. Your view, sir?
Yeah, here marketability has no relevance for levy under GST. Only thing is there has to be a consideration. If it is established that there is no consideration, then there cannot be any supply.
Yes, sir.
So this is very important in this
Yes, sir.
case.
So it has simply been disposed. It has simply been disposed of because no one is ready to take it. So there is no consideration charged for it. In fact, expense has been incurred to dispose of this scrap.
Yeah, that's what it needs to be established that there is no consideration. So that could be it could be a challenge. A department may think there is value. So it is somewhat a gray issue. But if it is established like hazardous material or something like that, then there should not be an issue.
Right. And so lastly, what is the GST impact of material shrunk in the process carried out by job worker 2? So in the question we have discussed that 500 meters has been supplied to job worker 2, and in that process the fabric gets shrunk in the dyeing process, and after the dyeing activity is done he returns 480 meters. So in my view, there is no GST impact as regards this material which has got shrunk in the process of dyeing activity carried out by job worker
2. Yes, agree. Go ahead.
Okay, sir. A principal is engaged in the manufacture of exempted goods, has sent some inputs to job worker. So there is no ITC claimed by the principal on such inputs because he is engaged in the manufacturing of exempted goods. Now, if the job worker doesn't return the goods within 1 year, whether such principal will be liable to pay tax on the same as per 143 despite the fact that no ITC has been claimed on the inputs. So, sir, to summarize, basically he is a manufacturer of exempted goods and he has not claimed any tax on inputs. Now the job worker has not returned it within 1 year, whether still he is supposed to pay tax as per 143. So, sir, actually, if we see from the earlier law in Senvat credit rules, the job worker activity was treated somewhat differently. Rule 45 said that the Senvat credit on inputs shall be allowed even if any inputs as such or after being partially processed are sent to a job worker. And then in subclause 3, they said if the inputs or capital goods as the case may be are not received back within the time specified under subclause 1 or 2, as the case may be, the manufacturer or provider of output service shall pay an amount equivalent to the Senvat credit attributable to the inputs or capital goods by debiting the Senvat account. So basically, the earlier law was on the principle that you take the credit, and if the goods are not returned within the specified time period, then you again debit the Senvat attributable to these inputs. However, when we see 143.3, the law makes a deeming provision that it shall be deemed that such inputs had been supplied by the principal. There is no concept of taking the ITC when you are giving it to job worker. Of course, that is also allowed, but there is no concept of reversing the ITC if the goods are not returned within 1 year. It treats somewhat differently because it says it's deemed to be a supply. So even though the manufacturer in this case may be a manufacturer of exempted goods and has not taken any credit on inputs, if the same is not written within the stipulated period, it will be deemed to be a supply and tax will be payable.
In my view, the supply could
Yes.
be both taxable as well as exempt. If it is a supply of taxable goods, then as per the rate applicable, you need to pay GST. In case of exempt supplies,
Yeah, sorry to interrupt, sir. Interrupt, sir.
Yeah.
My final product is an exempted goods, but what I am giving to the job worker, those are taxable goods.
Yeah. So in that case, yes, I agree with you. If the goods sent itself is exempt, then there is no question of paying any tax. If the finished product is exempt, then there's a different thing. So the question of that question will arise when the job worker is sending the goods back.
Correct.
Yeah. Go ahead.
For this case study, I would request that we have 5 minutes discussion from participants as well. This requires some discussion and brainstorming.
Okay, go ahead. Sir.
Yeah. So ABC Private Limited is a manufacturer and located in Maharashtra. It has imported certain capital goods for the purpose of quality control and sent to his job worker in Chandigarh. Now, the final product of the company is also being manufactured by some other job worker located in Delhi. The goods are sent by job worker in Delhi to second job worker in Chandigarh for final quality control test. Now, the machinery imported by the company is very bulky and has a life of 20 years. The company is also having an arrangement with the job worker for conducting quality test for a period of 10 years. ABC would like to know whether there is any practical solution available or whether they have to mandatorily bring back the machinery from Chandigarh to Maharashtra after 3 years and send it back again under fresh job work challan. So basically, one process is carried out by a job worker in Delhi, and then the goods are sent to Chandigarh to another job worker who does the quality control test. The machine is very bulky. He's going to continue this activity for next 10 years. Whether I should bring it back after 3 years or maybe 2 years extended period, what 143(1) allows. Whether I have to do that again and again, or whether is there any practical way out to this issue.
Rajiv sir, you.
Just give me 1 minute only. I am reading the relevant provision. Give me 1 minute.
Yeah, please. Meantime, Keval, I have not heard anything from you.
Yes, sir. Sir, this is out of syllabus for me.
Simple answer.
In practice, there is nothing out of syllabus.
No, sir. In fact, I was just evaluating. Can we look at leasing kind of an arrangement, or can we look at getting a registration in Chandigarh for ABC only, and within 3 years period, we can just on documents we can call it back and again resend it to. That is what just I was thinking on those lines.
Vasant sir, here there is no relaxation given in the section 143. The clause B says within 3 years you have to bring it back. Now the bulky and all those excuses, there has to be some exception in the law. First of all, only thing is that yes, registering at an additional place can relieve you from all these issues. That is a suggestion from Keval. Yes, that is how you can save on account of it. Then there is no requirement whatsoever to bring it back. But otherwise, directly I don't find a statute unless I am reading just 143B right now, 1B.
Sir, I have a question here. After 3 years, I will raise a tax invoice charging applicable tax to the job, the place in Chandigarh. Then the Chandigarh job worker will again raise a tax invoice, because by raising a tax invoice, title in the goods goes to the job worker, and subsequently he will also send one more tax invoice for agreed value and transfer the title to me, and there will be an agreement between the ABC Private Limited and the Chandigarh job worker to the fact that the machinery will be remain to be the asset of ABC Private Limited, but will be located at his premises and used exclusively for the testing purpose of his product, which he gets it from another job worker. Whether that is legally possible.
Okay. Yeah. Interesting dimension.
Naresh sir.
We had this problem, practical problem in our own practice. What we have suggested that I said, I am taking that constructive delivery of that machinery, and I enter into the renting agreement or leasing agreement with the job worker. So the delivery can be a constructive delivery also, because it never says it has to be brought back to my factory premises or anything. I should have taken, I am taking the possession. Maybe possession may be the deemed possession also, and then I enter into that leasing arrangement with this party. Whether that can work or not. We personally feel that it should work. I have received it. Hello. See, otherwise, पहले जब भी excise में क्या था, you have to bring back in the factory, you have to bring back in the factory of the service premises of the service provider वगैरह. Here this they say कि बस you have to receive it, you should receive it back करीने. So constructive receipt is also a receipt in my opinion.
No, in that case, what you mean to say is just by creating the delivery challan after within 3 years time limit, can we say it is received back? Again,
there is no need of delivery challan also, because the machinery is installed in the place of the job worker only. करके, ठीक है? If I create a document saying that this machinery, now I am giving it on the lease to you or on the rent to you, and you start paying me the rent करके. Now it means you are converting your job worker into your lessee of the machinery.
Yeah.
That is what one of the perhaps this could be one of the way out. I don't know how much it will succeed, but हमने तो ये advice दे दिया है. अभी भगवान जाने क्या होगा आगे.
This judgment आएगा पहले सर मार्केट में.
This bring back is concerned. No, bring back word is being used vis-a-vis inputs and not capital goods.
Yeah.
In this section, no, bringing back, these words are used along with the word inputs and not the capital goods. So capital good में bringing back is concerned. What Naresh bhai says here, there is a point in it.
Received back. Here received back है. Hello.
हाँ.
Sir, 143(4) में are not received back.
I received it, na boss.
Yeah. That also wording is same. Because 143 is applicable for sending the goods out. When it is sending physical movement, and once you follow 143, then physical movement is required. If you don't follow 143, then physical movement is not required.
But Vasant, this 143(4), no, if you just read for a minute, where the capital goods other than mold, dies, etc., sent for job worker are not received back by the principal in accordance with the provision of clause A of subsection 1. Now again, they are giving reference to 1A only, sir. That is, or are not separate. So reference to 1A, and 1A talks about bring back inputs, huh?
Hey, even capital good पढ़ जालो और
capital goods और capital goods पीछे. Yes.
थोड़ा आगे capital goods.
Sir, bring back will apply to both. Bring back inputs after completion of job work otherwise, or capital goods.
Yeah.
Other than molds. So that bring back will apply to both.
Yeah. So by issuing challan, you should get out of this job work section 143, then pure other transaction by way of separate agreement. I think that is the solution in my view. Archit, you can now express your view and conclude.
Sir, Sumit wants to say something.
Yeah. Please, Sumitji.
Sir, I'm just looking at two situations where this may not be workable or the job worker may not be ready for this leasing transactions, all those things. I'm just thinking aloud, what happens in all these cases where the leasing and all these things do not work? Can I find something within 143(1) itself? That is what my thought process was. So I was first trying to hit on the clause of sent out. So capital goods which is imported and not received by me inside my physical premises, can I send it out? That is the first question that I'm raising. So is 143(1)(a) intended for something that I've actually got in my factory and thereafter I've sent it out? Is it limited to only that situation first?
Fantastic point, Sumit.
The second thing that comes into play, sir, can this quality control machinery be treated as tools? It is definitely not mold, dies, jigs, or maybe fixtures or tools. Can be fitted within this bracket?
See, Sumit, the word is sent to and not sent out to, no?
Sir, 143(1)(a) bring back inputs after completion of job work or otherwise or capital goods other than so and so within 1 year and 3 years, respectively, of their being sent out to any of his place of business. So after being sent out, I have to bring it back to any of my place of business.
But Sumit, 143(1) fourth line read to sent to another job worker. That's how they are reading.
No. Sir, that is sent from one job worker to another.
Yes.
We are right now. What we are dealing with is the quality control machinery.
From principal.
No, 143(1)
to another job worker.
But 143 may send any inputs or capital goods to a job worker is also there. There the word is send. It is written send.
Sir, correct. I am reading 143(1)(a).
I got it, but then what I am trying to say, 1A is taking of being sent out. So it is only recognizing the period based on that. But more important, first it is saying 143(1), it is sent, word is sent. See, if you read 143(1), then A is saying that you have to bring it back.
Within 1 year of being sent out.
So sent out is concerned, no? Sending is happening in 143(1). 1A it is bring it back.
Okay.
So your analogy is concerned, no? Sent out. In my view, sent out has to be relevant for 143(1) and where the word is sent.
I agree. So on a more precise reading as pointed out by you, I agree on that. So my only point that comes into place, can we put this under fixtures and tools?
No, really, no. I think so. Very, dicey. I don't think so. It should be capital good to that extent because it's an equipment, plant, machinery which is required for testing. That is what our Archit has put up in the question, I believe.
So tools, although has not been defined in Act, I was also looking for that. So it says hammer and screwdriver and all these things are treated as tools. So to take
and
that,
also 1 second, Archit. Section 19 also enables the goods can be directly supplied by the supplier to the job worker premises without being brought into the premises of the principal manufacturer. So directly importing and sending that is very much allowed.
It's sent out.
So that is not an issue. And yes, with regard to tool, you are telling something, you can proceed.
No, sir. I think I don't have any final view on this because this is if we read it in some other way, then it will make the entire job work process redundant. But yes, I'm sure some judgment will come, and I think Naresh bhai ka client ka judgment will come very soon. So I'll wait for that judgment.
तो ट्राइब्यूनल अभी तो ट्राइब्यूनल सेट नहीं हुआ है अर्चित पहले तुम्हारा इंटरेस्ट है ट्राइब्यूनल सेट करो पहले
Yes sir. Okay, so sir, we'll just move to last case study, which is on sent on approval.
With your permission, I am just leaving out because I have a partners meeting right now.
Oh, okay, sir.
So I'm sorry, I'm taking a leave, because I have to immediately log in there.
Okay,
I've got
sir.
3-4 phone calls. Yeah. Okay.
Okay. Bye,
Thank
sir.
you very much. Archit, thank you very much. Vasant bhai, thank you very much.
Okay, sir. Bye bye. Yeah. ABC is located in Surat and has sent gold jewelry to a trader having his shop in Mumbai. The jewelry is sent on sale on approval basis on 1st January 21. As there was no confirmation from the shopkeeper even after 6 months, on 30th June, ABC raised a tax invoice as per the provisions of Section 31 and paid tax on the supply made. Now, on inquiry, it is found by the department that the trader had further sold the gold jewelry to a customer in his shop in February 21 by adding his profit margin. ABC was not aware about the sale made by the shopkeeper. Now the department is asking ABC to pay interest for the period from February to June as the title in goods had already transferred to the shopkeeper in February when it was sold to end customer. Is the stand taken by the department correct?
Archit, this is a fine. The case study we'll deal with, but only thing this is not job work related, I think.
Sir, because it said sale on approval was also
That
the
is
topic.
also within syllabus.
Yes. This is within. Yes.
Okay.
Yeah. So,
Yeah, Archit, please give your view. If I have to add something, I will add. Already now we have exceeded the time.
okay. So, sir, we can take some help from the section 24 of Sale of Goods Act. It says goods sent on approval or sale on return. When the goods are delivered to the buyer on approval or on sale on return or other similar terms basis, the property therein passes to the buyer when he signifies his approval or acceptance to the seller or does any other act adopting the transaction. So basically, in this case, the buyer has done the act of adopting the sale by further selling it to the end customer, and therefore the property in goods passes on to the seller on that date. We must also see section 27, which says that sale by a person not the owner. So subject to provisions of this act and of any other law for the time being in force, where goods are sold by a person who is not the owner thereof and who does not sell them under the authority or with the consent of the owner, the buyer acquires no better title to the goods than the seller had, unless the owner of the goods is by his conduct precluded from denying the seller's authority to sell. So basically, in this case, if ABC, who is from Surat, if he says ki no, the sale made further by the shopkeeper, I'm not accepting it or I'm not allowing it, and therefore the title in goods does not passes to the end customer, then of course a stand can be taken. But in that case, he will have to ask for the jewelry to be given back to him, which I feel will not happen in such cases, because this is a very common case where it is given for sale on approval basis. It is assumed that the person will further sell it to someone else. So, as per 24, section 24, if any act has been done adopting the transaction, then the property in goods passes on to the buyer, and therefore, in my opinion, the sale has taken place from the trader in Surat to the trader in Bombay in Feb 21 itself, even though ABC may not be aware about the sale made by the shopkeeper, and yes, interest will be payable on this. Sir, Vasant sir, your view, please.
Yeah, in my view, for the breach of the shopkeeper, the person who has sent the goods on approval basis cannot be punished unless the original supplier, that is person who has sent the goods on approval basis, has issued the tax invoice. The property in the goods will not transfer merely by giving the possession of the goods for approval purpose. I don't think the title in the goods will pass on. Without having title in the goods, without the knowledge of the original supplier, shopkeeper sells it further, it is breach of contract. So that is what I feel so interesting.
Sir, but that is what, so the Sale of Goods Act says either you should call it back. So basically, if the last line says, unless the owner of the goods is by his conduct precluded from denying the seller's authority to sell. If he denies his authority to sell, then yes, he can argue, but then he should call back the goods. If he accepts it, he does not do anything, because normally in such businesses what will happen is, yes, it is given to you to sell it further. He did not inform me, but he sold it further, which has duly been accepted by ABC. Then whether still can he argue, you feel?
Yeah, question is, if it is accepted without protest, then matter would be different. He is also in agreement with the shopkeeper. If he is not in agreement with the act of the shopkeeper, then matter is different.